Doing?
Morning.
Good morning.
Yeah, I'm good.
It's good to have you here. You're
Thank
looking
you,
smart.
Yeah.
I know your morning started off very busy.
Yes.
I saw a comment, Mr. Tanga, and I think this is what prompted me to have this conversation with you. I think a business owner posted something asking about why the kwacha is appreciating and we're not feeling its impact, and then which one has gained more value? Is it the kwacha which is appreciating, or is it the dollar that has gained more value? Because we're saying, okay, the kwacha is performing well against major convertible currencies, but we're still not feeling its impact. And that is why I want us to start our conversation from. Why is it that the kwacha for some months now has been stabilizing, it's appreciating against the US dollar, but we're not feeling the impact, Mr. Tsanga?
Okay, so if you allow me to put certain things in context, I think it would be more justifiable for me to even come to your question. We can look at what has caused the kwacha to appreciate. Obviously, when you look into the background, especially when you look at last year's performance, we saw that the kwacha was as high as 28, 29 somewhere per unit of the US dollar. So now, because we have seen a number of complementary effects which are coming from the export of copper, copper, for example, has really given that substantial productive output, giving some bit of positive development on the side of forex. And again, if you were to look at the Bank of Zambia intervention in December 2026, if I'm not mistaken, they issued the currency directives, which basically gave that substantial effect now to have the kwacha have more strength, where we are not now going to interplay with the local market with the dollar in terms of transaction. So the aspect of using kwacha as the only currency in the domestic market for payment and settlement is what has also given that shape from that basis. And that's the reason why, if you look at the January pattern in terms of performance, we received a substantial effect of about 15% appreciation level. What basically this entails is that the market was somehow, maybe to use this loose word, was somehow panicking in terms of offloading the dollar because of that policy. And not only that, also another combination of using Chinese currency in the settlement and payment toward the tax issues. So that also has complemented, meaning we have now lessened the demand for dollar in the intermarket forex system and plans. So what we are seeing now working out is that there is an aspect of looking at kwacha to be having more strength in the center of every transaction. And as for Zambia's case, even when it comes to paying tax now, it has sustained about 25% in terms of paying tax, whether from the mining or any other. But of course, the mining has been the main target in terms of formulation. So what we are trying to see is that kwacha is basically working out, so aggressive in terms of our transaction cycles. And most of the activities are now commanded into kwacha's, strength. So now, coming back to your case of why the strength in kwacha is not transmitting or having that transmission mechanism on the pricing structure. What we see basically here is that, obviously, yes, for good reasons, kwacha has been commanding strength. But the challenge that is there is that it's not the only factor that determines, key matrices in the business cycles. So what we are seeing is that, yes, kwacha can actually be able to receive even about 20%, maybe over the year. We are talking about 32% in terms of appreciation effect. But the key factor is that some of the other complementary elements like fuel, interest rate, inflation, all these should also be holding at some point to a point where we should be able to see that they have a short to medium term stability. So that momentum itself is what can actually be able to speak into cascading effect on the pricing output. Meaning the goods that we are selling out there can only command a longer price model if some other key factors that are attached to Kwacha, attached to the business aspect, are also holding for a longer period of time. But if they are fluctuating, like the way we saw the increment that triggered in fuel in March, that already has given a different shape. So the reduction in most of the essential goods cannot be triggered from that point, cannot be maintained rather, meaning what we're going to see is a situation whereby some other stress levels are also able to give a quantifiable effect, meaning if pricing of the fuel is something that not having that predictable environment or conditions, meaning even if the Kwacha is seeming to work out with a downward effect, it will not be able to transmit that quickly. So the lag effect, even when it comes to forex market.
Sorry to cut you short, Mr. Tsanga. I want to understand something. Obviously, when we talk about the domestic economy, we're also speaking to fuel. How is it possible that prices of fuel have gone to 29? They've gone to around 26 as well, and then we have the Kwacha, which is around 18, and it doesn't have a direct impact on fuel prices.
Yeah, so as I mentioned, the Kwacha is not a standalone factor in business determination or undertaking. What is basically just happening there is that it's also, in one or the other, even if we don't seem to have a direct effect in terms of pricing a factor, but what we're trying to see is that it's moderating some of the key elements that are accompanying in the business cycles. Like, for example, if you look at the macroeconomic variables like inflation, obviously, Kwacha has played a part in inflation. It means inflation is coming down, even now hovering around policy corridor, meaning we do not have the sharp jumps that you should be able to see in most of the commodities, and we have maintained that momentum. Meaning the condition of the business is that even if you seem to buy something today at maybe 10 Kwacha, that 10 Kwacha will be sustained in the coming weeks, meaning we're not going to see any sharp changes in terms of the pricing dynamics. So that is what Kwacha is playing there indirectly. But now when you look at the broader sense of pricing effect in the environment, the taxes, they are quite fixed. Some of these things that are fixed also are playing a part on the same. So meaning the Kwacha, even if it's seeming to be appreciating with some good nominal margins, that transmission won't be able to quickly help out and make things in a better shape. But again, the indirect impact that will happen there is that we'll not be able to have sharp changes of the pricing structure, meaning the inflation is being controlled from that perspective. And again, the key factor here is that if the stress levels like copper production start having volatility, then we have also the payment on the debt instruments and many others, then that also bring another dynamic in terms of what we should be able to see. So the entire market dimension is that not until we have certain things holding for some time, then we'll be able to see also pricing structure triggering or following the patterns. So as it is right now, there is no way, even if you've got Kwacha appreciating with maybe 10%, and then you'll see fuel going by 15%, then we'll see other elements also are twisting from there. So it's difficult to have actually pricing structure, command into some available basket price. So it all becomes difficult in essence. So until we see certain things are moving toward the same direction, then that way we'll be able to see that the pricing structure of essential goods at household level will be able to have a reduction, and that reduction will speak of disposable income. So even when you see the negative economic growth is not pairing with the job creation and many others, it's difficult for you to actually be able to speak to say pricing structure is speaking into manageable scales. It's difficult because what will happen in the case is that when you see things taking shape like that, it basically has to contend with the other parameters, even when it comes to policy guideline. If, for example, if the energy sector still has some unpredictable patterns it's difficult also for one to actually reduce the cost. It's the same with what happens when Kwacha appreciates. It cannot just trigger you to automatically reduce because you don't know what will happen next day. Just like the way the forex market performs, it's unpredictable. It's unpredictable in the sense that sometimes it can take just few hours of appreciating.
The concern here, Mr. Tsanga, is that the Kwacha has been appreciating for a very long time now. I think even before we entered the year 2026, the Kwacha was doing quite well. How is it possible that a few months down the line, we're still not feeling the impacts of the Kwacha appreciating? And I know that when the Kwacha appreciates, it provides both relief and also pressure, but on the domestic economy. But that relief part that the Kwacha at least provides to the domestic economy, we're still not feeling it.
It's The effect of Kwacha's appreciation is there in the form of indirect effects. The indirect effect is that you've got a market structure which is not jumping the prices. To begin with, when you look at the appreciation of the Kwacha, it has made strong contentment on inflation. It has made a very stabilized and predictable environment for capital stock, meaning the cost of contracting loans is something that is within scalable factors. Yes, maybe the aspect that I should be able to mention here that there are a lot of intangible aspect of feeling about it, because what is happening that we are not directly seeing the benefit, but we are seeing the framework that is actually building up. And what is happening there is that the macroeconomic variables, inflation, interest rate, and many other aspects are being held. If Kwacha starts depreciating, this also starts changing, meaning the environment will also change. And what we see basically is that, like I mentioned, the pricing effect and its output is something that is actually working out with that manageable sense of, standard. Meaning, Lovisa, if you bought mini meal for 235 Kwacha today, you basically find it even in the same range next week because Kwacha has kept holding some of the key factors, meaning you will not be able to see it jump over. If you see it jumping over...
Not reducing either.
Yes, so the key aspect that it does not just come with an immediate cause to see the lines to say Kwacha is appreciating and this is what is actually transmitting. The transmission mechanism or channel might be able to work through key pillars like the inflation aspect, the policy, the monetary policy itself, and many other aspects. Of course, the biggest factor here is that we can only see the good effect to be felt in a medium term. Like, for example, what we're going to see is that we are within the harvest production period, meaning if we basically do a proper harvest work right now, and also we do a proper post-harvest activities to contain the harvest that we're going to have, or the output, meaning we can see the effect of Kwacha. So right now, from now up to August, we've got a lot of different combination factors that are basically going to help Kwacha sustain. One, we are now getting into tax season, meaning we'll be able to have a lot of taxes coming through different sources, including the mine sector. We are in a period where we're now going to have tobacco marketing season. Tobacco, we understand that it's not something that sells within Zambia, but it has more of an export-based kind of revenue, meaning we can be sustained with the level that we are able to see. In the medium term, as we see, there is a likelihood that Kwacha can appreciate even by 5% or even 10%. But again, the large part of the losses on the Kwacha won't be able to be seen, at large scale. What we're going to see is a land bound, meaning the position that we have, it's actually consolidating or digesting gains, meaning the market is still holding very firmly. Even when you look at the agricultural output that we're going to have, we'll not be able to start having demand for imports because we've got a lot of enough food right now. And maybe because of election kind of situation, which will be quite active, we may tend to destabilize the pattern a bit, but it's not something that is going to, show that sensitivity as it is right now. What we see basically playing out things that to basically work out with the food. If you go with the non-food aspect, I think it will be able to, trigger, especially when you look at the oil aspect. The issue of petrochemical and oil is what is worrying in the case, because obviously we need some petrochemical products in the mines, we need some petrochemical materials for the fertiliser manufacturing plants, and also we need fuel to actually use in the campaigns and all those things. So the demand for import, and that's the reason why, if maybe I may be able to start on this critically, that's the reason why the government has sort of saying we cannot basically let the Tanzania pipe oil be on access, by market player. They need to control it. Need to be controlled so that we can have stability within this period. It's quite sensitive. It's strategic in the sense that it's going to help change the narrative. Yes, it may look like it's a targeted measure to sustain the votes and all that, but in the long run, we need to protect our gains as Zambia, because what we have done on the macroeconomic levels, I think we've done quite a very wonderful job in terms of trying to hold a number of key pieces in shape. And that is more reason why it's important to look at a way in which we can sustain this momentum despite going to election, activities. So it's important that we need to look at the economic, performance and also match with the governance and policies as well, so that we are able to actually navigate this situation. Imagine, Lovisa, before you ask me, imagine we are coming from where we are negotiating the loans and all that, then after election we start going through the same thing. So it becomes more painful, even if it's seeming to be a situation where we have maybe new political character. It's important to start from where this economy is commanding. That will be able to even put a lot of things in right perspective, meaning we can even now take ourselves toward the 2030 middle status income. Yes. That will be able to shape up a number of things. And what we have done to ourselves is a good platform which need now to kick off from there. We are in a stabilization, platform which should be able now to help us start now giving more substantial and objective effect into the economic formula.
Right. But when you've touched on oil, Mr. Sanga, and just petroleum products. Of course, I know that Zambia imports the petroleum products. And when we have a stronger kwacha, we expect that, the cost of doing business in the country at least eases, even lower prices of commodities on the market, even just the cost of doing production also at least reduces. Let us talk about the importation costs, Mr. Sanga. I know that the adjustment of fuel prices to 29 only happened in the month of March, and we're headed towards another monthly review of fuel. And the government took a step to remove taxes, VAT and excise duty on petroleum products as well as diesel, as we import them as Zambia. With the kwacha at 18, Mr. Sanga, and the decision that cabinet took, government announced and that cabinet approved, in the month of April, in an event that the ERB does not adjust the fuel pump prices upwards, because at least now we know that there's still negotiations in the Middle East and there's that relief. If there's going to be a reduction in the fuel pump prices and the kwacha at 18, can we project or can we anticipate that prices of goods on the market are going to reduce?
You see, it's relatively difficult to predict now, given that the Strait of Hormuz is still not opened up for trade activities. Especially when you look at the aspect of oil commodity, I think this will be able to transmit much quicker, because obviously oil is an integrator, which is basically a base of factor playing on the side of consumption, production, and all that. So it all depends with the liberalization that will take place in the Middle East. If we tend to prolong, obviously, whatever has been happening in terms of ceasefire cities right now, if it gives birth to some positive, healthy pathway, then we'll be able to see that we are not going to face this any longer. But again, with the intervention that the government has taken place regarding the issues of intervention on police intervention, I think it's also something that we need to quantify, because obviously we're talking about more than 3 billion Zambian Kwacha, lost in this, meaning we're talking about 200 million US dollars, as a loss. And again, we're at a point where the central government should be able to contain fiscal discipline. We need to work on the IMF templates. We need to also look at the election, without any massaging of policy structure, meaning we need to contain the policy framework so that we do not go back to the old habits. So what we are basically playing out here is that we basically have to play a delicate balance in terms of what is really happening. Obviously, the intervention is that we are hoping to see this policy suspension of VAT and exercise to last up to June, and we expect this to remain quite resilient in terms of model of supply. We've seen elastic supply in some of the products, and we were hoping to see that petrol in particular would be able to be in short supply. But again, the difficult situation is that the market is not certain as if there will be, for example, if we will be able to see that there can be continuously supply of commodities. But what we should also be able to see that we need to downscale our operation, even just from the sense of using, transport factors. Maybe it's the same thing with what other countries are doing, where we basically need to look at how best can we, start making some special containment on transport. Instead of us using, maybe say, for example, Minister of Finance using a bus for all of its workers to go to the offices, or to maybe even just start working from home. Some of the essential offices that are able to work from homes or remote areas. I think those are models that we need to look at. Mm-hmm. So there is a need for us to look at how best can we start working on mitigative measures, because where we're going, if the ceasefire does not work in favor of what we're hoping to see, it will be disastrous. Meaning, what we're going to see in the global markets is a total recession that will be triggered from there. Also for countries like Zambia, where we are 100% importing some of those commodities like fuel, it becomes relatively difficult. So this is where the gist of the matter is actually playing out to say, look, we need to put models that can survive the current situation, and also we need to look at risk factors that are standing there. So it's important to look at all those factors, all those issues. But again, my feeling is that it even becomes more challenging, especially at a point when the parliament has dissolved. It's more challenging to look at the intervention of this nature, because some of these aspects might have needed the aspect of working with the parliament or working with the cabinet in terms of trying to realign certain things. So meaning we are going to see a more challenging environment when it comes to this aspect. Because you see, obviously, yes, the constitution may be able to provide some mandate on the president or whoever is going to be take care. Or in the case we know that HH is still going to be holding the office, but there can be some limitation when it comes to certain public expenditure. So it's important to see how best we work out this, challenging period. Especially when you are even in the campaign active period, it's really difficult. Because anything that the government may tend to even work out, trying to mitigate effects, to others it may seem to be like it's political maneuver. And sometimes it may be justifiable, because you see, at a point where we are, and where we're going, it will be quite difficult to operate certain government functions, especially at a point when we are also facing excessive external shocks. It becomes a bit of a challenge. So we just hope to see that some of these things can actually be able to shape up for a better, perfect order.
Allow me to understand something, Mr. Tsanga. When the Middle East war broke out, there were anticipation that this was going to affect the global economy. And of course, petroleum products and just the importation of oil and prices of oil on the international market. But I want to understand, how is it that Zambia's currency has remained stable and is still thriving amidst the Middle East war?
That's a good question. Thank you so much for that question. That's the reason why, if you followed me in my preamble, I had to do a baseline on what has been triggering Kwacha to perform very well. Obviously, we understand that domestic factors are also interrupting positively to the position where we are seeing the Kwachas performing quite buoyant. The key factor, as I mentioned, is that the central bank intervention through the policy moderations have actually been able to help change the narrative, because obviously it is a situation where one day you just wake up to say, oh, we are refusing to use dollar in our local settlement in terms of payment, so use Kwacha. So everyone had to wake up to say, oh, I need to offload my dollars. So meaning there was a bit of, I must have mentioned that loose panicking. People started offloading in January, and that's the reason why we had a huge influx of dollars being offloaded on the market. So that, again, complemented with the less demand for dollar, where now Chinese currency is interplaying into the forex market aspect, meaning we are now lessening the demand for dollar, and at a point where we are, the dollar in the global market has been very weak, from that perspective. So again, the combination of a positive copper productive output helping us to, anchor a number of good elements, especially when it comes to forex market. We have seen that a good combination of different factors that are at play. And at a point where we are, Zambia is not importing more of foodstuff as compared to where we are coming from. Obviously, we imported at some point, we had the drought. So now, this time around, we are working with a very strong carryover stock, which will even complement to the anticipated harvest. Meaning, what we are doing in the local market, the many positive elements, they are interacting, and making the strong case into what we're seeing right now. So meaning, the fundamental aspect of having that strength is something that will sustain for some good time. Just like the way we are talking of ZLI, sorry that I've just gone into this. ZLI first quarter has performed quite very well. They have met the target on the revenue projection and all that, but they are missing targets on the refunds. Meaning, what we are seeing is what is translating to some other effect, like real estate team not performing to the peak. So meaning, what we're seeing is the aspect to do with real estate was directly linked to the dollar, meaning most of the property owners were cashing in dollar. But now that there is this aspect of changing into Kwacha as the final settlement, which is mandated now, that becomes a bit of a challenge, meaning some people they are resizing or rebalancing their costing structure in terms of what is happening there. So even when you look at the current situation as the Kwacha is sitting, we are basically seeing it digesting into gains, meaning we are now having the normal performance of Kwacha because we are coming from where it was having speculative demands. Whatever was happening in January and February were not triggered by productive fundamentals, were triggered by speculation and sentiments. So what we are seeing now, it's now consolidating into the aspect of real economy, meaning what we are seeing is the normal performance of the Kwacha, as opposed to the first quarter where we are seeing, speculative as well as, sentimental appreciation.
As we wind up with our discussion, Mr. Tsanga, when government declared, or cabinet declared rather, that they're going to remove VAT and excise duty from imported petroleum products. There were projections that Zambia is going to lose millions of dollars with this decision that government has taken. How does this also impact on our economy? I mean, this is just the first month after that declaration by Cabinet. We still have 2 months more to go. How would this impact the economy?
Okay, we are working with the IMF framework as I hinted. The framework in terms of policy, architecture and structure demand that we need to contain fiscal discipline. The reason why we are talking of fiscal discipline, it's because